Hey everybody, it's me, Adam Chapnick with the Security Token Academy, and we are here in Los Angeles at CIS, and I'm joined by the CEO and co-founder of Archax, Mr. Graham Rodford. Thanks for joining us.
No worries, thanks for having me.
All right, so for everyone who hasn't heard of Archax, which I'm sure is very few people, you're globally recognized. So
Yeah.
what is Archax?
So we're a digital securities exchange based in London. We've just applied for our license to be a regulated trading venue in the UK, so we think we're one of the first. We're backed by a hedge fund and financial professionals, so we've been in the securities area for a long time.
Got it. And so you are of a team of three of you that are sort of running the show from the top level. What is your backgrounds that brought you to this?
So I've spent the last 20 years in hedge funds, most recently the Chief Operating Officer, Chief Compliance Officer and a partner at a hedge fund in London called Omni Partners. So they were 1.4 billion and ran a variety of strategies, so most recently event-driven and lending, but in the past long, short, macro, systematic. So familiar with all sorts of trading strategies. And I actually left there a year ago with my two co-founders, Matthew Pollard and Andy Flatt, who were the CFO and the CTO. So really, we worked with the company to make our exit as painless as possible, but we all left because we just have a passion for this area. We felt that looking out on the crypto area, that there are a lot of crypto exchanges out there, and there's a lot of institutions that were looking onto the space with interest, but the problem was that it's very hard for them to find a credible venue to trade with. So what we're trying to do is set up an institutional grade credible venue in London. And as part of that, what we realized is that actually two of the issues for institutions are, firstly, they can't find a credible counterparty, but also cryptocurrencies are difficult for them. Firstly, they've got a bit of a bad reputation, and secondly as well, the venues on which they trade just don't have the systems and processes in place for them to deal with. So due to that and due to the product volatility, they're much more interested in security tokens. So quite early on in our journey, we said, look, let's, cryptocurrencies, well, we've always said utility tokens just aren't interesting for institutions, and they're not really interesting to us because of the value. I think the cryptocurrencies themselves, they could be interesting, but as they're not regulated in the UK at the moment, we're staying away from those, and we're focused fully on security tokens.
So what do you think is the inherent promise of security tokens, I guess sort of for humanity, for the world?
Yeah.
What's going to be different now that there's such a thing as digitized securities that can be traded?
Sure, so I guess a lot of people talk about all of the advantages like 24/7 trading, fractionalization, et cetera, but what most people that have worked in the world for a long time realize is you probably could have achieved all of those before. An exchange could have stayed open 24/7.
Right.
It probably could have listed anything globally. And if you wanted to fractionalize something, you could just put a piece of property into an SPV and issue millions of shares. Those things could kind of been done before. But I think what the ICO craze did, if nothing else, was showed people that there's a whole generation of people, and I don't mean it as an age thing, I just mean a mindset of people that want to be more entrepreneurial, want to have access to capital markets. So it showed that people wanted to go to capital markets with their ideas, and it also showed that there were individuals that wanted to back these companies directly. So I think you saw that that what you had was global entrepreneurs wanted access to capital markets and global investors wanted access to product. So I think that came about from the ICO point of view. The issue with ICOs is the way that they're structured is, you're owning a discount or a service or a product in the future, but it's so hard to get what that underpinning value is.
Yes.
Whereas digital securities are so different. Most of the time let's say you've got a property, it has a value. If you've got a fund, it has a NAV. If you've got a company, it has a valuation metric, a balance sheet, whatever it may be. And because these are real valuations, it means that the value of the token is underpinned by something. And as a result of that, the volatility will come right down. And it will give investors a lot more comfort, especially institutional investors. Sorry, so just to answer your question a bit more over, I think it's
it's fantastic.
It's a global market, so it has the ability to really open capital markets up globally to everyone. So you can get an individual in the UK invest in a small amount in a security based out of South Korea or wherever it may be.
Right.
And I think it's quite that's what I get really excited about.
Yeah, that is thrilling. I mean, it's an outcrop and an offshoot of the earlier crowdfunding sort of craze that happened. Of course, there was no equity involved initially.
Yeah.
And I think that was always the promise. It's access to capital and sort of this two-way street of investors who wanted to get into things all around the world and people all around the world who wanted access to investors.
Exactly.
From your point of view, you have a particular insight, and all three of you, as you all work together at a hedge fund.
Yeah.
What are the actual thresholds or pain points that the big institutions need or require there not to be in order to get involved in this space? What's missing, or what needs to be built?
Yeah, so I think we've talked about credible counterparty already.
Yeah.
So if you, I mean, the whole space is developing, and when we think of security tokens, there's a value chain. The issue of the person that issues the security token needs to work with a primary issuance platform or a tokenizer. You need good quality primary issuance platforms in place. And then if they're going to go on and create a liquid secondary venue after that, you need a good secondary market in place. And then after that, you've got all post-trade events. So you think of those like settlement and custody, and you need all parts of that value chain to be appropriately developed.
Yeah,
and
locked down. They have to be
exactly, and they need to be non-porous, incredible jurisdictions with credible counterparties. So we're trying to address the secondary market piece out of London. We're credible, we're transparent, we're trying, we've approached the FCA from the start. We want to be fully regulated. We recognise, and the FCA do too, that these are securities. So really it's a well-trodden path. And there are companies like Securitize, Tokeny, River that you spoke to just now that also recognise the power of regulation, and they're trying to do everything in the right way. So I think, the counterparties are evolving, and that's good. But you definitely need good product. So when we list companies on Archax, we hope that there'll be appropriate, robust, credible products to enhance the value of the area. And you also need demand for the tokens and liquidity. And that's going to be quite a big challenge for the space.
I was just going to say, so the two things that are interesting, well, let's go there. So tell me, how are we as a community, how are we going to build that demand? Where's the liquidity going to come from?
It's going to come from different places. So I think I'll run through them all, and then I think collectively, hopefully, it paints a picture.
Lay it on us.
So there's so the tokens themselves. When people are out there issuing the tokens, in the ICO world, a lot of people were participating in those tokens because they wanted the multiple when they eventually list. You won't get that sort of demand in this space, but I do expect to see security token offerings going out at a bit of a discount to hopefully the value of the company or what they consider to be the inherent value of the company over time. So naturally within every token, you'll get a kind of community that will support that token at the start. So when it lists on an exchange, you'll already have some activity. And then beyond that, if you look at the market makers in the space, at the moment they're not interested in making markets on a single property in London or what it may be, but when it starts to grow, it becomes more interesting. When you've got, let's say, 100 properties in London, suddenly it can be a good proxy for an area, and it might be something they can use to hedge their portfolio.
That's interesting, yeah.
And when you see exchanges, we're already starting talking to Blockway, you could see Zero, and these other guys that are operating in the space, and the reason being is that, they are competitors in a sense, but we all need to work together to help develop this area. And when you start having tokens listed on multiple venues, that too creates opportunities for market makers coming to the area and play arbitrage between the exchanges, which helps develop the liquidity in the space. Yeah. So that kind of gives an underpinning liquidity. But the truth is, for a lot of these illiquid assets like properties, hedge funds, private equity funds, they're just not going to trade at the volumes that blue chip companies trade at. They're small companies that, what we're trying to achieve here is better liquidity than exists currently.
Yes.
So if you've got a 7-year private equity vehicle, it trades once
a
quarter.
Zero liquidity.
Yeah, exactly. Right. It's much better if it
Right.
trades at some point. So I think on that side of things, what you talked about crowdfunding just now, and crowdfunding is fascinating, but it doesn't feel like it's ever really taken off in the way that it could have done.
No.
Because you've got several crowdfunding sites. It's quite hard. It's not efficient to go through and look at all the projects. It doesn't feel like a market. It feels like it feels like you kind of almost looking through friends' business plans, and you can chuck a bit of cash in if you want. So they're quite fragmented, and I don't they're a good step, but it feels like it could be a lot more consolidated on a global basis. So I think once you bring all of those together, you start to create more liquidity, more interest in all of those ideas that people can trade freely.
Got it. Okay, so what's on your 2019, let's say, roadmap for Archax?
So we've submitted our application to the FCA to be an MTF. So there's no doubt they'll put us under a great deal of scrutiny over the next 6 to 12 months. We hope to get our permission, obviously in 6, but it may take longer. This is. The FCA recently released a consultation paper where they laid out that they are working out their position on cryptocurrencies, utility tokens they don't regulate, but securities they do, and security venues they will regulate like security venues. So from our point of view, it's we're straight up the fairway for them. This is this is a security venue trading securities.
Yeah.
So hopefully it will be quite straightforward, but obviously because we're dealing with a slightly different asset class, there will be a lot of conversations. In the next 6-7 months as well, we're working out our partnerships with companies like Securitize and Tokeny. DLA and Tokeny in the UK have just launched something called a Digital Token Alliance, which is useful for moving the space forward. So we'll be working with those guys, seeing how the whole ecosystem is going to interoperate, and then hopefully towards the end of this year we'll be listing, and we hope to come to market with 10 to 20 tokens on our exchange day one.
Terrific. Well, thanks for sharing with us all about the platform. We wish you guys all the luck.
No worries. Thanks very much.
Graham, thanks for being with us.
Cheers. Thank you.